Good morning and welcome to the EBIQUITY PLC full year results investor presentation. Throughout the recorded presentation, investors will be in listen-only mode. Questions are encouraged and they can be submitted at any time by the Q&A tab situated in the right corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all the questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to CEO Ruben Schreurs. Good morning, sir.
Good morning, everyone. Thank you for joining us today for our 2024 full year results and outlook presentation. I'm joined today by Kate Herity, who has recently joined us as our new permanent CFO, and I'm delighted to introduce her or to let her introduce herself in a bit more depth in a second. Just for those that aren't aware, my name is Ruben Schreurs. I joined EBIQUITY in 2020 when the company bought my company, Digital Decisions. Have been in several C-level roles at EBIQUITY since, from Chief Product Officer to Chief Strategy Officer, and I have taken over as Group CEO in November last year for my predecessor. I am the largest individual shareholder at EBIQUITY. I own around 7% privately, and I represent an additional 6% in voting rights in the company. And I'm very excited today to take you through the EBIQUITY that we're building. Kate, do you want to introduce yourself?
Sure. Hello, everyone. Thank you very much for joining us today. So my name is Kate Herity, and I joined EBIQUITY as CFO very recently, only last month, having previously held senior finance and transformation roles across a variety of media and information businesses, and also across PLCs and private equity. Most latterly, the roles were in TalkTalk, Kantar, and Informa.
Great. We have a very much renewed executive leadership team. I've made several key appointments since taking over the role, which I have highlighted on this slide for everyone, just to walk through briefly. For the first time in EBIQUITY's history, we have a dedicated Group Chief Operating Officer. Mark Gay has been appointed by me in January to fill this role. He's a long-standing star employee of EBIQUITY. Kate has joined us as permanent CFO just over a month ago, following from a fantastic interim CFO, Brian Porritt, who is still with us until the end of next week, has been helping with the onboarding of Kate and with wrapping up the audit and the 2024 results presentations. Peter Hemford, he has been appointed to Group Chief Revenue Officer. He came over through the Digital Decisions acquisitions back in 2020. He was one of my co-founders. And again, this is the first time for EBIQUITY to have a dedicated role focused on revenue and growth. And then Michelle Morgado, our Managing Director of UK and Ireland, has been promoted to join the executive leadership team also in January, which allowed us to alleviate some of the remit and workload from Nick Pugh, who is now responsible for Continental Europe and the integration of marketing effectiveness with media performance, one of our key strategic levers. Kate will now take you through the 2024 results headlines before I will take you through some more strategic updates on the company and the investment case.
Right. So a little bit more of an introduction to for me and why I might join EBIQUITY. Why did I join EBIQUITY? So I joined because I could see that it had a unique position as a world leader in media investment analysis, combined with really exciting opportunities for both growth and innovation. So EBIQUITY is at a pivotal point in its journey, and I believe I can help add value during this key phase. So looking at EBIQUITY, I can see it had very strong business fundamentals. So we're the world leader in what we do. We have unparalleled access to data and insights and great sticky long-term relationships with over 75 of the top 100 advertisers in the world, supported by low customer churn. So our experienced teams offer a really deep expertise and exceptionally broad coverage, enabling us to provide all our customers, including very large customers, with a truly global service. So Ruben will elaborate on this later, but our proprietary data and advanced analytics tools, including our AI-driven solutions, set us apart in this industry. Financially, we have strongly recurring revenues with good forward visibility, and we have an increasingly tech-enabled operating model, which allows the business to scale efficiently. We have low capital intensity, coupled with good cash flow conversion, and we have committed bank facilities in place. So most excitingly, under Ruben's leadership, EBIQUITY is undergoing a cultural and operational reinvigoration. Our AI Centre of Excellence is driving both in-house efficiencies and innovative solutions for our clients. So this creates really significant opportunities for us to focus on profitability. So not just through top line growth, but also through improving operating efficiencies to enhance margins. So in summary, this is a really exciting time to be joining EBIQUITY. It's fast-paced, it's full of ideas, it's full of opportunities, and it's got a strong sense of purpose. So I'm very pleased to be here to take you through the results from last year, which demonstrate both challenges and areas of resilience. So revenues of 76.8 million were 3.4 million or 4.3% lower than in 2023, driven by reductions in media performance and media management service lines, which saw declines of 2.8 and 2 million respectively. However, these were partially offset by growth in marketing effectiveness at 1.2 million and contract compliance, which grew by 0.1 million. So despite the revenue shortfall, we managed our costs efficiently during the year. Staff costs increased by just over 1% despite inflationary pressures, and other operating expenses also rose slightly by just over 1%. So I think we can demonstrate tight cost control there. This took our adjusted operating profit to 7.9 million, down from 12 million in 2024, and resulting in an adjusted profit margin of 10.3%, which is a decline from 15% last year. Net finance costs were down nearly 1 million at 1.4 million, with lower average borrowings and favourable FX differences offsetting higher interest rates. Reduced profits brought our adjusted tax charge of 2.1 million in at 0.5 million lower than last year. Highlighted items charges of 8.1 million were 3.3 million lower than last year. About just over 7 million of those charges were driven by goodwill impairment and amortization. Our statutory loss amounted to 3.6 million, which is 0.6 million better than in 2023. So we'll now look at breaking down revenue by geography. UK and Ireland remain consistent year on year, with revenue broadly flat at 32.2 million. Growth in marketing effectiveness and contract compliance here offset a decline in media management services. Continental Europe saw a 4.4% decrease in revenue to 21.7 million, driven by reduced agency selection and management business. And this was partially offset by marketing effectiveness growth, notably in France. North America experienced a 7.8% decline to 16.1 million, mainly due to reduced media performance scope in the technology and retail sectors, though media management and marketing effectiveness both saw some upsides. APAC saw the steepest drop, with revenue down 13.2% to 6.7 million, impacted by competitive pressures in Australia and economic challenges in China. And if we look at that revenue performance through the lens of our different service lines, you'll see that media performance and media management declined overall by 5.2% and 20% respectively, with media performance, our largest service line, reflecting lower renewals and reduced scope, particularly in APAC and North America, and the decline in media management being driven by shortfalls in agency selection and management projects, mainly in UK and Ireland and continental Europe. As I said earlier, contract compliance and marketing effectiveness both grew year on year. Contract compliance grew modestly, with upsides in UK and Ireland and APAC offsetting slight reductions in North America and Europe. And marketing effectiveness grew significantly, delivering 13.4% growth to 10.3 million, driven by new client wins as well as scope increases with existing clients. Notably, new wins in France contributed nearly half of this growth. So you can see from this slide where we've faced challenges, but we've also demonstrated growth in both our marketing effectiveness and our contract compliance service lines. Moving to the next slide, this shows that 2024 was very much a year of two halves. So in H2, we achieved higher revenue growth and implemented strict cost controls, leading to adjusted operating profit more than doubling from 2.3 million in H1 to 5.6 million in H2, and adjusted operating margin recovery, increasing from 6.2% in H1 to 14.3% in H2, bringing margins closer to 2023 levels. So these improvements, we saw some revenue upside, but we also saw really effective cost management through tactical cost savings, looking at headcount delays, looking at deferring discretionary spend. And so these were all achieved without jeopardizing service quality or talent retention. So this discipline has set us up for improved momentum heading into 2025, where the first quarter results for us have proved encouraging, with revenue and operating profit slightly above our expectations. So turning to the balance sheet, our net assets reduced by 6 million, from 42 million to 36 million during the year, with the most significant movement being a 4 million impairment of historical goodwill balances. We also saw a decline of nearly 1 million in lease liabilities, resulting from the reduction of the term of our German office lease. Working capital increased slightly due to 2 million lower trade payables, resulting from our focus on cost control in H2 that I mentioned earlier. And contingent consideration liabilities also reduced from 4 million to 2.7 million, following an updated assessment of the provision. Focusing on net debt, and the next slide. This slide provides a comparison of our year-end position with net debt to the position at the end of H1 2024. So you can see that net debt at the year-end of 14.8 million was 500,000 lower than at the end of H1. And this was driven by our strong focus on billing, on cash collections, and on cost control. Excluding the restricted cash within our Russian entity, net debt stands at 15.6 million. And our plan is to show it on this basis, excluding this Russian cash going forward. In 2025, we have a good level of committed financing in place, with a newly increased revolving credit facility, an amendment having been made in March 25, increasing the available financing up 5 million to 35 million. And we believe that this provides us with more than adequate liquidity and headroom until we will need to refinance the facility, which runs until April 2027. The next slide shows cash from operating activities for 2024 of 5.5 million. This is down on last year, impacted by the lower operating profit and the 2 million reduction I mentioned in net working capital. Though after adjusting for highlighted items, our adjusted cash flow conversion metric is at 108%. And looking ahead, we expect to have a continued focus on cash management to support operational efficiency. So in closing, while 2024 did present challenges, both the momentum achieved in H2 and our strategic focus position EBIQUITY for sustainable growth in 25 and beyond. And I look forward to working with Ruben and the leadership team and all of our very talented colleagues to realise the company's full potential.
Thank you very much, Kate. And now I will take you through more of the forward-looking strategy and the reasons why our client partner with us to start. We operate in a market that this year in 2025 surpassed the $1 trillion mark. $1 trillion in annual global ad spend that EBIQUITY exists to help optimize. And this is desperately needed. Within the $1 trillion, or just over that global ad expenditures, 75% is currently spent through digital media channels. This is something that back in 2017, when I started Digital Decisions, was the rationale for me starting a company like EBIQUITY, really dedicated to digital media. Right now, it makes up 3/4 of the market, and this continues to grow. Digital media is rife with wastage and inefficient spend. It is complex and it changes rapidly. So this is where clients, brand advertisers need most help. And that's what EBIQUITY is there to provide. We estimate that 42% or more than 42% of the $1 trillion is spent in a way that is not as effective as it should be. It's not driving the business growth that advertising is supposed to deliver for brand advertisers. We're talking about roughly the economic size of the entire GDP of Vietnam, or 14 times the entire global recorded music industry. This is a significant market that needs to be optimized. It needs to mature. When done right, advertising is a powerful growth driver. EBIQUITY, in partnership with Thinkbox and several Group M agencies, has proven that the short-term profit payback on advertising, when done right, is 1.87 times. The total term profit payback, which includes the long-term effect of building brand equity and advertising continuously, is 4.11 times, making advertising a significantly valuable investment, and EBIQUITY exists to help maximize the incremental gains as a result of these investments and to create the business case for our client stakeholders to help them warrant the budgets they seek in order to grow their brands within their organizations. To give you an example of a fantastic client relationship of EBIQUITY, our long-standing client, Jaguar Land Rover, where we've delivered over £300 million of incremental value through the work we've done with them around transforming their media operations, governing their media investments, and growing their incremental profit. We help brands deliver effective and responsible advertising. We call this ERA. Effective really means driving the maximum amount of incremental business growth as a result of the investments in advertising, making sure that every dollar, pound, or euro is spent in the best possible way, ensuring optimal brand health and both short and long-term competitiveness. This goes hand in hand with responsibility. These two are not mutually exclusive, rather the opposite. Responsibility refers to making sure that advertising investments are compliant with regulatory frameworks and with contracts between our clients, the brand advertisers, and their agency and technology partners. We do a lot of this compliance work and are experts in the different regulations faced by brand advertisers. For example, the Fair Credit regulations in the USA that prohibit targeting people based on gender, ethnicity, age in the finance sector, or regulations that are applicable to alcoholic beverages clients in many markets across the world. We help our brand advertisers navigate these regulatory frameworks and maximize the effectiveness. We make sure that investments in advertising are in line with company policies and that we minimize or completely prevent any excessive wastage as a result of their investments, including making sure that they don't have a negative impact on society. For example, by advertising and therefore economically empowering platforms that proliferate hate speech. We provide advice clients can trust, results that they can measure. We are an independent authority. We're not conflicted. We don't provide any media buying or selling services. We come at all of the work that we do as an independent authority, and that drives incredible value. To highlight one statistic on here that I find particularly engaging and a clear testament to the value that we deliver to clients is that in the last 5 years, we have delivered over $900 million in cash returns to our clients from their agency partners as a result of the agencies not delivering in line with their contractual agreements. You can imagine that the ROI on working with us in that regard is massive. So what is it that we do? In historical reports and also the 2024 report, which is closing a chapter of previous leadership, we've referred to our business across 4 service lines: marketing effectiveness, media performance, media management, and contract compliance. But really what EBIQUITY does and what we will be reporting on moving forward is that we help our clients transform, govern, and grow all of their operations that are relevant to advertising and media. Henceforth, Transform will cover our media management service line. Govern covers our media performance and contract compliance service lines. And Grow is where we provide econometric modeling to help grow brands through incremental profit in our marketing effectiveness division. Transform really means help clients design and deploy the operating models that will set them up for future success. This is consultancy work that Ebiquity provides. We create purpose-built operating models. We help clients design the model that is fit for their business and stakeholder objectives. We help them select partners, for example, media agencies, but also technology partners. And we help them design the ideal technology infrastructure through a combination of in-house developments and partner licenses that they engage with. An example on the right is a case study for a large automotive client, where we help them design and deploy an operating model that sets them up for success all the way through to 2030. This is to give you an idea of the longevity of the work that we do and how forward-looking the relationships with our clients really are. Through doing this work, we delivered an immediate 20% cost efficiency versus their existing baselines. So whilst delivering long-term strategic value, we also deliver short-term immediate value back to the company that can be reinvested in effective channels to drive further growth in their company. An example of our governance work, where we provide ongoing, continuous monitoring and validation of all of the investments in media across the world, across all of the different operating units, brands, product categories of our clients, and across all of the different partners they work with. This is often a roster that can get very complex and decentralized. We provide clarity. Ebiquity provides a source of truth that we refer to as a source of trust, which all partners, but most primarily our clients, can rely on to make investment decisions and to optimize their investments in advertising. We create transparency. We help identify opportunities for and then implement best practices. And we foster long-term trust with our clients and in their key relationships with their partners. An example on the right, Perfetti Van Melle is a client, an FMCG brand, where we delivered up to 53% of value opportunity in the first year of working with them. 53%, so more than half of their investment in media that was in scope for this review was either wasted or could be invested better. You can imagine the results of improving that, reallocating those investments. Another example is a large FMCG brand that we've had a long-standing relationship with, where we've delivered 127 financial compliance audits across 48 markets over 5 years. We've delivered 106 million euros in returns and findings through the work that we've done, which for this clients amounted to an ROI on the Ebiquity fees of 53.1x. Highly accretive and very much worthwhile. What we often see is that these returns, credits, whether they're credits or cash, can be used to invest in transform and grow solutions provided by Ebiquity, as well as delivered as savings back to the business. And then we help our clients grow. As Kate highlighted in our financial results for 2024, our largest growth driver in the company was our marketing effectiveness practice, with 13.4% growth year on year. This is, I believe, the very first signal of what a renewed focus on our marketing effectiveness capabilities can bring us as a company. We deliver true incremental profit, validated and trusted in the market through the media mix modeling, brand equity studies, price promotions, geo-testing, all led by our team of expert econometricians, experts in advertising and media. Virgin Media O2, VMO2 on the right, is a long-standing client where we deliver grow services for them. We help them design their investments in advertising and media. By doing so, we've managed to increase their brand effectiveness by 21% and their media ROI by 26%. This is a long-standing, ongoing relationship where our modeling and our advice guides the longer-term strategic decision-making, but also operational and tactical decisions when consumer markets change, or for example, we're faced with economic downturns that need to be addressed. More on that later, as of course that is very relevant for the time that we live in today. EBIQUITY is the global authority. Why I say that is because we work for more than 75 of the top 100 global brand advertisers based on their global ad spend. That is unprecedented. Our footprint, our experience, our deep integrated relationships with these clients give us access to best practices and investment data and client priorities at a scale that none of our competitors or contemporaries are able to provide. In total, we work for more than 500 clients across the world in 123 countries. And we analyze over $100 billion, or more than 10% of the market in media investments every year across all of the different service lines that we provide. We refer to our model, our global network model, as being most global, most local. We are currently live in 18 markets with local offices, with local experts. This includes all of the major media markets. We have experts on the ground that provide local relevancy, local expertise, because many of the challenges faced by advertisers are incredibly nuanced. Even within, for example, continental Europe, the German and French markets are wildly different in terms of how the trading mechanics work and what the priorities are for clients as a result of that. But we provide global consistency, scaled deliveries, and we feed our findings and validated results all the way up to the top, to the CMO and the CFO in the relationships that we have. But we're able to service our clients regardless of how complex or decentralized their operating models are at global levels, at the global level, and in local markets. We have technology which is allowing us to operate at greater speed, accuracy, transparency, and with way more richness and depth than any of our competitors are able to provide to brands. We get transaction data, transacted media data directly from source across a large number of the different media channels we cover, especially in the govern service line. In our media data vault, which is our rich data infrastructure, it's proprietary, we hold $73 billion in transacted media spend. This amounts to trillions of ad impressions, where we cover over 123 countries. Across all of the work we do, we seek and find opportunities to enhance our delivery, to delve into data that would otherwise be more difficult to obtain or analyze, to find richer insights, all with the ambition or the mission objective to drive effective and responsible advertising. Our global footprint is interesting. EBIQUITY is listed in the UK, as all of you on this call today know, and this is very much where the origins or the primary origins of the company are. 42% of our revenue in 2024 came from the UK and Ireland, but this market constitutes only 5% of global ad spend. In Europe, we derive 28% of our revenues in 2024, and this market constitutes 14% of the global ad spend. As you can see, our extraction rates or extraction ratios are very different still in the Americas and Asia Pacific, which are two primary geographic opportunities and therefore priorities that we're focused on to expand our footprint and deliver our forward-looking services into these markets that provide a huge commercial opportunity. In the Americas, we went through significant growth in 2021, 22, and 23. 24 was more challenging. We're working on recovering and making sure that the market is set up to deliver its sustainable next phase of growth. We are innovating for the future. EBIQUITY is 28 or 29 years old, but we are forward-looking and we are putting our money where our mouths are. In the last years, we've made several critical acquisitions, starting with Digital Decisions, my business, in Q1 of 2020. Then a expansion into Canada with Ford and Semple, who were a partner before, providing similar services to Ebiquity. And then in Q2 of 2022, we purchased MMI and MediaPath, giving us not only additional scale, primarily in the US region, but also new access to new technologies that enable us to deliver our work better, faster, and with richer insights and results that drive returns for our clients. Obviously, acquiring businesses creates friction during the integration and transformational period that follows that. At the same time as acquiring the last two businesses, we have gone through a magnificent transformation at Ebiquity that was very intense, put a lot of pressure on our internal teams, and in my opinion, caused over the last few years Ebiquity to be more inward focused than externally focused. I am very happy with the fact that we are out of that transformation, and we believe we have a strong platform to start to really capitalize on the opportunity and to materialize the value delivered by that transformative effort delivered by so many people over the past years. In our sector, we are leading when it comes to AI solutions. We have established an AI Center of Excellence last year. We've launched an internal agentic AI chatbot, which is based on large language models that are leading in the market, but all hosted and accessed by our global workforce in a private, secure environment, trained on Ebiquity data, client deliverables, data, obviously all in a secure way, managing sensitivities correctly, but allowing us to enable our entire workforce to do better work, faster, improve their workflows, the way they're able to partner with clients, and also the types of insights they're able to explore and find and deliver to clients as a result of this technology enablement. We call this ERABot, and this is a fascinating and super exciting thing for the company that has already delivered major improvements in our ability to work faster and better. As a result of our fast progress and our incredibly promising results to date, I've made a capital commitment of up to 750k sterling in 2025 to accelerate our R&D efforts in this area. We're funding this from our cash positions, from our headroom, and the reason that we say up to is that we're carefully balancing our investments with working on reducing our net debt position. AI is becoming more agentic. AI is also ubiquitous. I sometimes joke that AI is Ebiquity. AI is becoming more agentic, which means that AI is becoming better at fulfilling complicated, multi-step tasks and processes with less and less human oversight. This is an incredible opportunity, and therefore all of our clients are experimenting with this and are deploying both homegrown solutions, but also all of their partners across agencies and technologies are introducing AI layers to the work they deliver or the platforms they provide. The more agentic and autonomous these AI applications become, the more difficult it becomes to have proper human oversight. So AI needs clear guardrails and instructions in order to deliver results, the right results, and mitigate risks. One of our largest clients refers to this to me as they want to innovate fast, but need to make sure they do so responsibly. This is where Ebiquity comes in. We've released the ERA curriculum. ERA, just as a reminder, stands for Effective and Responsible Advertising. The way you should see this is it is essentially a training manual that can be used when our clients internally or their partners are utilizing any AI application, it doesn't matter from which provider, to train that model and give it clear instructions on what it should and what it shouldn't do For example, the different regulations that are in place for the scope on which it is creating a media plan, or the company rules, guardrails, best practices, taxonomies, and naming conventions relevant to the client that the AI application needs to adhere to when it generates its output. We help clients design and deploy their ERA curriculum that they can use across all of the different applications that relate to advertising and media, as I said before, whether they are doing so internally or externally. This is an intense 2 to 6 month consulting project, which is delivered with a start and an end. But then there's an option for clients to take a subscription with Ebiquity where we maintain and host the ERA curriculum. So it's 2 new commercial opportunities incremental to what has been shared earlier today and what you've known about Ebiquity before. We're very excited about the traction in this area. In the second half of this year, we plan to release an agentic AI pre-flight check. The way Ebiquity primarily worked historically is that we review data of campaigns that have been delivered, and we check whether the delivery was in line with best practices, and we find areas for improvement that can then be deployed in future campaigns. We operated mostly downstream. This is an opportunity for us to move upstream, to provide a scalable, automated tool that helps during the media planning process to prevent any non-compliance or issues seeping into the campaigns that will be run. So it's more proactive, forward-looking, highly incremental and complementary to the work that we do. We know that there's demand for this because historically Ebiquity has provided some pre-flight check capabilities in a less automated way. What we found is that delivery was difficult because the timelines of a media plan process are so short and often tactical that the turnaround time for our teams to do a pre-flight check just weren't in line with the requirements and expectations of clients and their agencies. This changes that completely and allows us to become a part of the planning stage. And as I said, operate more upstream. Our growth strategy is combining several things that the company has been focused on with our new strategic priorities. We are focused on continuing to grow our priority regions, the Americas and APAC. And of course, continental Europe and UK and Ireland also continue to provide an opportunity for growth. But we highlight these regions because of our relative under-extraction in these markets, as showcased earlier in this presentation. We're focused on driving operational efficiency, and we have never lived in a more exciting time to do so than now, with all of the capabilities that are coming online and all of the capabilities we are delivering to our teams globally through the internal secure AI applications we're pushing into the organization. We're leveraging the extensive client base we have through focused cross and upsell opportunities, and we're focused on increasing the revenues of digital solutions. As I showed earlier, digital now makes up 3/4 of the entire global ad market. New strategic priorities that we have deployed and are working towards is to stay and remain a leader in AI, both in terms of how we enable and empower our staff to engage with these applications and enhance their workflows and the solutions we're able to provide to clients. We have fully shifted focus from revenue to operating profit. We share a firm belief that there is such a thing as the wrong kind of revenue. Historically, all of Ebiquity's forecast, budgets, incentives were built around revenue, which in my opinion has led to us having some lower quality revenue in certain areas. We're putting accountability and responsibility to drive high margin growth into the organization. And we've deployed that across all of the different budget processes and incentive schemes that we have live for our staff globally. and we're empowering the regional leadership to focus and optimize towards operating profit. We're integrating marketing effectiveness and media performance, which is something that we're unique in terms of our capability to do so. We have competitors across both marketing effectiveness and media performance, but those competitive landscapes look very different. We're the only ones that can bring the two together and have skilled operations and expertise and track record across both. And bringing them together, I believe, is a huge strategic advantage and something that the market is really yearning for. We're focused on one EBIQUITY. We operate as one EBIQUITY. Everyone that represents EBIQUITY in the market needs to represent the entirety of EBIQUITY, not just a single service line or single market. This is already moving forward very well, I believe, and we're making it much easier to buy from EBIQUITY, and we're making it much easier to sell EBIQUITY as well. Navigating EBIQUITY has never been more straightforward than it is today. We're very excited about the opportunities that will bring as we continue to focus on cross and upselling across the very vast client roster that we are privileged to work with. We have refreshed the EBIQUITY narrative and positioning. Those of you that have attended previous presentations will probably have seen a very different EBIQUITY today. We have released updated assets, including website and all of the client-facing collaterals, and we're continuing to double down on our clearer narrative and positioning, all rallied behind ERA, effective and responsible advertising. And we have a focus, and we're investing in that, on emerging channels, fast-growing channels with a lot of complications and issues for clients to get expert independent advice on, such as streaming TV or connected TV and retail media. Now, I wanted to highlight today specifically that we are very likely heading into some kind of recession. Exactly how intense and how globally widespread it will be remains to be determined and has proven to be highly unpredictable, largely driven by the tariff interventions across the world, mostly stemming from the North America region. We believe that consumer markets will change, the global trade and manufacturing landscape will change, and therefore many of our clients will be impacted by the results of these trade interventions and potentially the economic downturn. The good thing, and this is why I'm confident, is that EBIQUITY is a proven partner for brands that have to navigate challenging economic cycles. I don't want to say we're anti-cyclical, because I think we're both cyclical and anti-cyclical. We've done really well through COVID, where most brand advertisers had to radically cut or even entirely completely suspend all of their investments in marketing and advertising as their sectors dried up, for example, in travel and hospitality. We help clients cut the right things, make sure they preserve as much brand equity and value as possible so that they can come out of the economic downturn period with competitive edge and turn it into a leadership advantage. Similarly, we work for all of the large automotives, except for Tesla, who don't advertise. And through the automotive chip shortage crisis, we helped our brand advertisers manage the fact that their supply dried up and they had to steer away from focusing on promotional, sales-oriented campaigns and focus more on brand building and maintenance in their advertising activities for when supply came back online. We're releasing a study in the coming weeks called the ROI of Resilience, advertising through economic uncertainty, to firmly establish ourselves as, or re-establish ourselves as the partner for brand advertisers to navigate economic downturns and specifically the likely impending recession we're heading into. Now, as a last slide, I just wanted to highlight why I think this is a very good time to join me as an EBIQUITY shareholder. As I said at the start of this presentation, I am the largest individual shareholder and I hold 7% in the company. And that is because I'm committed and I believe in the opportunity ahead. We have gone through a significant transformation, and we're now ready to capitalize on the new structure. We have a new leadership team set up to deliver profitable growth and innovation. We have strong momentum for effective and responsible advertising. We have a significant lead in AI, both in terms of internal utilization and deployment and external solutions. This is not just some buzzwords included in this presentation. This is real value that is online now. And of course, I believe, and the market agrees with me, that we have a currently materially undervalued share price. So I personally believe this is a very good time to join us if you believe in the opportunity that we presented to you today and in our ability to turn around the company and enter its next phase of growth. Now, I want to thank everyone for dialing in today, and I think we're going to go through some Q&A now.
That's right, Ruben, Kate, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions, and you can do so just by using the Q&A tab that's situated on the top right-hand corner of your screen. But just while the company take a few moments to read the questions that have been submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboards. As you can see, we have received a number of questions, both pre-submitted and throughout today's live presentation. And Ruben, if I could hand over to you to share the Q&A, that'd be great, and then I'll pick up from you at the end.
Thank you. Appreciate it. And yes, of course. I see that there are two questions submitted live today on the call quite early on. The first question is, you are described to be uniquely positioned to help clients during disruptive times. How are you leveraging this position now, particularly in volatile sectors like retail and tech? I hope, considering when this question was posted, I hope my second to last slide answered this. If not, please ask a follow-up question and I will gladly provide more detail. Another question, you mentioned that you have already made some key hires. Can you provide more detail on these appointments? What specific gaps or needs within the team were these roles intended to address that may not have been covered previously? Again, I think the question was asked relatively early on. The key hires referred to are a combination of Kate being an external hire, internal appointments and promotions, and several external appointments really focused on senior, high caliber go-to-market or revenue-focused personnel that have been put in place. Also, we have made specific appointments for leadership on emerging media channels, deep expertise for CTV or connected TV and retail media. I hope that answers your question. Then there are some pre-submitted questions. The first one, how does EBIQUITY plan to monetize its new AI offerings, such as the ERA curriculum and the forthcoming pre-flight check agent? And what impact are these expected to have on revenue growth and margins in the near to medium term? The ERA curriculum I walked through already. It will be a combination of a high-ticket consultancy project followed by a subscription fee for maintenance and hosting. We are not yet fully set on the commercial model for our pre-flight check agent, whether it will be some kind of usage-based model or a tier-based subscription to be able to utilize the pre-flight check agent on an always-on, ongoing basis. That is TBD. We're now fully focused on development before we can start to engage in product market fit and commercialization strategies. With the development of proprietary technologies like the AIRF protocol aimed at enhancing AI efficiency and reducing costs, how does EBIQUITY intend to leverage these innovations to gain a competitive advantage in the media analytics market? Great question. Thank you. AIRF is particularly exciting, and I don't think I've mentioned it today. We have a protocol, a compression protocol, that allows us to create input for AI systems in a way that is condensed as much as possible to maximize accuracy. So we remove any conflicting statements or information or guidance, but also to minimize the compute needed to process and consume the input. So by lowering compute, we lower costs in terms of being able to use our AI era curriculum, for example, and we're significantly lowering the carbon footprint as a result of processing the information. I think this is completely in line with our continued focus on responsibility, and within that, sustainability, and making sure that we don't create excessive, unnecessary costs for our clients and internally when we use AI applications. We're thinking about this ahead of the curve, and the AIRF protocol, which is essentially a compression file type, is a key initiative that I think sets us ahead of the market quite significantly. Then, how far along is the GMP 365 rollout, and is it delivering the anticipated efficiency, benefit, and cost savings? Is much extra needing to be done to achieve the expected benefits? Great question. We are well integrated and set up to utilize the GMP 365 platform. And in certain areas, across certain services in our business, it is helping us to deliver projects more efficiently and at higher value. I think the initially anticipated efficiency back in 2022 that was communicated to the market has not materialized. Back then, the expectation was that it would deliver £5 million in annualized cost savings by 2025. That has not materialized. So the expected benefits have not been achieved. And I also think that that statement back then was made in a very different situation in the industry than we are in right now. We continue to benefit from the platform and have a strong relationship set up, enabled to do so, where we have exclusive access to the platform and use it with the clients that we work for. And then, in the current turbulent economic situation, do you anticipate a downturn in advertising budgets? And if so, will this negatively impact on your revenue targets? We absolutely expect a downturn in ad spend. We already see clients suspend or defer investments in marketing and advertising. However, as I explained in the second to last slide, we have proven historically, and I think we'll do that again now, to be quite resilient, because clients that need to cut their investments in advertising need to do so in the best possible way. You can't just randomly cut however many percentage points you're forced to cut by your finance leadership. So whilst it all depends on the severity and the widespread nature of any economic downturn or recession that may come our way, for now, I don't see that we are fully aligned with or correlated with downturns in ad spend, as we've also seen during and shortly after the COVID pandemic. But I will say that this remains, trying to read a crystal ball. It all depends on what happens, and we need to stay vigilant. We're monitoring the situation, and as you have seen today, we are pre-positioning ourselves to make sure that we adapt to whatever economic situation we enter, and we capitalize on it. We continue to support our clients, continue to deliver high value, as they are faced with the same challenges that everyone else is faced and need a trusted external expert partner to help them do it. I think those are the questions. So I would like to again thank everyone for joining today. All of you that are shareholders, thank you for your continued support. And those that may become new shareholders following today, thank you for your interest. I'm there beside you, and I take that very seriously. I think we have a huge opportunity ahead. I'm incredibly happy that now the team is fully completed with Kate by my side as a strong, high caliber CFO and financial partner to work with as we turn around this company and enter what I believe is an incredibly exciting, opportune phase in its 30-year history. Thanks again, and I wish everyone a fantastic rest of your day.
Ruben, Kate, thank you very much for updating investors today. Could I please ask investors not to close the session, as you now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. On behalf of the management team of Ubiquity PLC, we'd like to thank you for attending today's presentation, and good morning to you.